Hi, this is Acme with the Bulletin Board Heroes here at Zach's Traders Cafe for Wednesday, the 12th of July. Starting off with the FTSE 100, where there is a tentative recovery from recent lows. There may be rather obscure uptrend line there from back in November, heading through 72.29 recent lows, and an end-of-day close back above that old March support there at 73.35 could be the trigger for a return back towards the 200-day moving average area at 75.35. In the meantime, we do actually have an old support there around 7,400 as an initial target, but the main thing is that we hold above recent support and then head back towards that 200-day moving average area. As I've said several times before, normally with the FTSE below RSI 30, that tends to be a buy opportunity, even though it tends to be a bit of a rough ride at the end points of a potential turnaround, as we've had at over the course of the early part of July. Moving on to the DAX, which was already recovering before the FTSE and the Dow recovered previously or yesterday. Here we've got another move towards that 50-day line, 15,900. Above that, we're looking for a return to the 16,300 post-May resistance for this market. So basically it looks like a bear trap from below the May support and June support levels, and then back up again. It would be nice to see an end-of-day close for the RSI back above neutral 50. We're just below that at the moment fractionally, but that would be an extra plus point, and then maybe we could say that we're still within that rising trend channel from the end of September, which has obviously shifted along slightly over the near term. On to the Dow, which had a good day yesterday, and hopefully will continue in that vein. Here we can see that we are back above that 34,000 level, but we've really been in a range either side of 34,000, which hasn't been helpful considering that we were looking for a definitive break of that April 2022 resistance line there at 34,000. But looks as though, touch wood, we're on our way with a rising 50 and rising 200-day moving averages. Initial target up to 35,100 by the end of this month, which would be quite a coup for the bulls given the grim economic realities that we seem to be facing. RSI at 56, which is right in the perfect zone for a continuation to this latest recovery. On to Bitcoin, where we're also hoping for a definitive breakout. Here, still in this bull flag, looks like a bull flag, extended bull flag in place for over 3 weeks at this point. Floor of that flag around 29,500. Looking for as little as an end-of-day close through 31,000 to then open up the idea that we could head up to as high as 35,500 and the one-year resistance line projection from last summer. On the downside, a break of 29,500 could take us back to the 50-day line at 28,300, but that's the lowest we're expecting at the moment. RSI 61, so not overbought or anything else at the moment. Onto the stocks, and quite a interesting bunch today. ASOS is in the mix at the moment. We've had what looks like a gap fill rebound. So the top with the floor of the gap there around 334 bounced off that, sort of overlapped it a bit, but bounced off that. Looks as though we could get at least up to the resistance line there from May, which is around 385, and then hopefully then retest last month's resistance around 420. That would be quite a return from where we are now. So let's see if the shares can step up to the plate after that signal, the gap fill rebound. The only thing missing maybe for those who are cautious is the RSI to be back above neutral 50. It's 43 at the moment, and we haven't been above neutral 50 since the end of April, so that properly since the end of April, so that is quite a sign. If we get through 50, then it would suggest that we're more in a bullish frame of mind at the moment. It's just bear market rallies for this stock. Speaking of bear market rallies, we've got Amte Power next, and here it's all about the shares breaking that neckline resistance, the old peak there from the 29th of June. That was at 9 3/4. End of day close through 9 3/4, and we could be up towards the mid-teens, so maybe the middle of that big down day that we had back in June on the 15th. So that would be sort of 15, 16 pence if we can break 9 3/4 on an end of day close basis. RSI just pushing towards the 30 level, but we want to see it well above that to give some confidence. And the reason for actually including the stock today, apart from that neckline level at 9.75 pence is the way that we've actually gapped up today. So gap up through resistance over the next 24 hours could be quite impressive. On to BT, where I think the Telegraph reported that there was a bid in the mix. Obviously there is some stake building going on, but we've finally managed to break that line of resistance there from June. I did look at the shares on Monday, but they seem rather bleak. Yesterday, nice hammer candle, and today moving up. Maybe there's dividend buying as much as bid speculation here. Bullish divergence as well over the last few weeks, so that does suggest that we will break neckline resistance around 126 and then head up towards the 200-day moving average at 133, even if there is no bid and even if nothing else of any note happens for the shares. But I think the dividend buying could be enough over the next few weeks for the stock. Moving on to Chill Brands, which seems to be stirring over the last couple of days, breaking that line of resistance there from the end of May. That suggests, with the fact that we've also got rising 50 and 200-day lines, suggests that we're in a rising trend channel from the end of April, and we could head up to 10 pence while we're above the resistance line break around 6 3/4. So above that, looking for a reasonable return, hopefully by the end of this month on that 10p technical target. On to one of today's movers, which I haven't looked at for quite a while, Deltic, and here we've gapped through the 50-day moving average there at 27 pence. We also had bullish divergence on the recent decline, so that is healthy, and that's obviously was a flag that we could be heading higher, above 26, looking for as high as 42 pence at the top of that March broadening triangle, and only really back below the gap floor at 23, making this a bearish situation. So looking for support at and above the 50-day line, and 42 pence maybe by the end of next month. On to EQTEC, which had a decent announcement today, and here we can see that the shares have been able to rise on that news. Here we've got falling wedge breakout, shares up a third. We basically sort of handbrake turn, so the shares were heading south in a rather aggressive way until yesterday. And we've broken out of that wedge from May and above 0.16, looking for as high as 0.25 as soon as the end of next month, and perhaps even sooner than that. So a nice turnaround there, bear trap there from below the June support there at 0.15. Onto a stock where there's very little charting furniture, but I thought I'd, as a fun exercise, look at it. It looks as though the shares are in a rising trend channel from back in June. Top of the channel is obviously something which requires a bit of creativity, but it looks as though if we stay above 3 pence, we could head up to around 6.5 or 7 pence by the end of next month. The key is to have an end of day close above that old peak at 3 3/4. So 3 3/4, only above 3 3/4 are we looking for 7 pence on that. So don't get caught out on any horrible rug pulls, but at least the 50-day line there is rising. On to Musicmagpie, which I looked at a couple of days ago. Here we've also broken out of this triangle wedge kind of formation. The level, the line there around 17 pence above that, looking for the 200-day line at 24 pence, maybe by the end of this month, and then on a longer view, 1 to 2 months, up to as high as 35 pence, if everything goes well, which at the moment we do not know. If you're cautious, you might wait for a break of June resistance at 18.5 pence on an end of, sorry, higher than that, actually 20 pence on an end of day close basis, before deciding that there is a recovery here. Haven't looked at mobile streams for a long time, and looks as though there's something stirring here as well. Here we've got a bear trap from below the June support there at 0.09. Above that, looking for at least a return to the 200-day moving average at 0.13 or 0.14 even over the course of the next few weeks. At this stage, we'll feel that there is a base in place while there's no end-of-day close back below that old June support. Moving along to the next situation, another stock that we haven't looked at for quite some time, Northern Bear. Picture here looking quite constructive in the sense that we've broken out of this sideways consolidation, sideways shuffle, normally the best type of consolidation. So in this case, sideways move above the 200-day moving average, and above that at 46 pence. We're looking for quite a decent upside here, perhaps up to the top of that broadening triangle from the basically the early part of 2021. So that's that resistance line there heading as high as the low 70s. And maybe we'd see that by the end of next month. We'd like to see the 200-day line start to rise, and that would then be in sync with the rising 50-day moving average that we have at the moment. On to one of the more esoteric plays in amongst the small caps at the moment, RC365. Here we've had a zigzag within this rising trend channel. I suppose it's more drawn like that, but basically you get the picture. Rising trend channel there since the end of May. Top of the channel there heading for 220, and we're looking for that while we hold above recent support in the upper 70s. Ideally, there's no break back below the weekly lows that we've already put in place. I think 72.5, the low there, but obviously that one rather wild, swinging rather wildly, and not for everyone at the moment, perhaps. On to Shoezone, which has come up with a stonking RNS today. Gapped up, second gap up in consecutive months, and not surprising given that people seem to have a mania for wearing shoes at the moment, rather than paying their energy bills or mortgages. But rising trend channel there from this time last year, top of the channel there heading for £3, and we could see that as soon as the end of next month while we hold above recent resistance at £2.42, so looking decent there. On to Thor Explorations, where it looks as though the market's finally cottoned on to how decent the fundamentals are here. We had the trendline break at 18 pence at the beginning of the month, and we've built on that. We were always looking for as high as 23, and hopefully we'll get that by the end of this month, especially given the way that the shares have pushed higher and built on the gap that we had at the turn of July. Moving along to the last stock, which is THG Group. Here we had one of the more strange signals, an RSI trendline break, and that was around the 73 pence level. At that time we were looking for the mid-80s, but we've cleared that as well, and above the initial July peak there at 87, we're looking for THG to head as high as £1.25 as soon as the end of next month, and perhaps even sooner if that 50-day line starts to curl up over the next week or so. That's it from me today. More updates tomorrow.